On this trade issue, let's start with this. I mean, is it now something more than just something that hits sentiment? I mean, should we start talking about maybe a couple of rounds of earnings downgrades, or is it still the latter, or the former?
I think it's too early to really put it into earnings, but it's definitely affected sentiment. I mean, some of the European sentiment indicators have clearly turned a little bit. But our base case is, let's see what happens on the 6th of July. Obviously, the tariffs are going to be imposed. Then China will probably react. Then we have to wait till about the 20th of July to see if the next 200 is. It's not our base case that will happen, but the risks must be increasing. The longer it goes on, the longer it will impact sentiment, investment, earnings.
Yeah, and it already has. In fact, in a lot of ways, you look at what's happened on the mainland. Now, can I look at the currency weakness in China, though, and draw a direct line between that and trade, or is that more really just a dollar strength story?
I think initially China, the RMB was very resilient, even when the dollar was getting stronger. And there was, at the beginning of this year, a lot of the movement was really dollar versus the euro, because the euro had been particularly strong and needed to adjust, and the growth rates had to adjust, an interest rate differential. But in the last couple of months, it's definitely been weakness because of the dollar being stronger, and also now with trade, every day, the trade talks go on, it's going to affect the current account surplus. It's not going to be as good. So people start worrying about outflows. So the currency should be weaker. But we don't think we don't think China will devalue to react to trade. We still think that the message from China is pretty clear: stable currency.
What's the next thing you think that might happen here when it comes to the equity markets and I guess the currency as well? I mean, some people have floated the idea things might be about to kick off. Do you agree with that? In a bad way.
In a bad way. But I think it's about selectivity.
Okay.
You've seen, this year actually, you've seen, very good start to markets, particularly in China. A lot of people putting more money there. A lot of active investors now buying the markets. I think we've had something like 46 billion flows into EM and China and Asian funds this year, and quite a lot has gone out in the last few months. There's been a lot of money come out of H shares in particularly the last 10 days. I expect it will continue over the summer until we see some signs that earnings are there, and then I think it will stabilise, because a lot of everything, when these things happen, a lot of things get punished unduly.
Right.
There's a lot of domestic stocks in China that, particularly, let's say, highlight the education centre area, where they're not going to be affected by trade. They're completely domestic driven.
Right.
But they've still fallen as much as some of the potential trade stocks. So there is a sentiment issue going on at the moment.